everyone, guys. How are you? This is Shocks, and this is Shocks Capital FX YouTube channel. So today I want to talk about order block confirmations that no one talks about, right? So we are going to be looking at these three candlestick patterns that you should look out for when you have identified your order blocks. Then after that, we are going to charts and I'll show you these patterns on the chart on the order blocks. So make sure you watch to the end. Right, so we are beginning with this one, the first one that you see here. So we mark this one and we mark these two, and this will be the 30 pattern. So the first pattern that you're seeing price moving up, right, like this. So we are going to assume that this line that you see, this horizontal line up here, is your order block, or your zone, or your resistance, support, whatever it is that you use to predict the market, or to as your technical analysis tool. So what we are going to do is, this is a move or a channel that is going up in price. So preferably this is on the lower time frame, or on the time frame that you've identified your order block on. So as you can see, price is moving up. So we are assuming that price has been moving down, right? Then left this order block, and now it's retracing back to the zone or the order block that you have marked, and this is the zone. So when price is moving up like that, this works on any time frame, any commodity, any currencies, or whatever you want to use it on, right? Price is moving up. Then when price hits the zone, it leaves a pin. As you can see, this is a hammer or a spinning top, or whatever you wanna call it. We have many names of these things, right? So this is what we are doing. We have a pin right on the order block. So this is confirmation number one that you can use in your trading. And the best way to be using this is on the time frame that you have identified your order blocks. And if you are someone who trades order blocks, you would know that even if you get your order block on the H1, you will see a refinement of that order block on the M15 or lower time frame. So this will apply on any time frame that you're looking at. So this is a pin. Then you go to the second example, or the second candlestick confirmation that you would want to see. We see price moving up, right? Just as the previous example, right? Price is moving up, hits the order block, but as it hits the order block, it hits with a bullish candle, as you can see. So the black ones are the bullish ones, and the red ones, as you would see, are the bearish candlesticks. So price hits the level with a bullish order block, then gives us a candle that is the same in terms of pips or in terms of length with the bullish candle, but this one is a bearish candle. So this pattern right here is called a railroad track candlestick pattern. So this is confirmation number two that you can use in your trading. Then you go to the number three, which is the most effective one, and I will show you how on the charts. This is a bearish engulfing. So if you want to use this example for bullish examples, you are going to be seeing the opposite of what you are seeing. You are just going to invert these patterns and it would look like this. So this will be your hammer, and this will be your bearish or bullish railroad tracks. Then you will see a bullish engulfing looking like this. So your bullish engulfing will look like this, right? This will be your bullish engulfing candle, if you want to see like that. So these are the candlesticks that you are going to be seeing. So we're going to charts, and I'm going to show you how these candlesticks can help you in real trading, right? So we are going on, this is EJ, this is Euro JPY. So what you are going to be seeing here is this. Remember, I said this works on any commodity, on any time frame, right? So this is your order block, right? You see this order block, right? We are starting with this, then we will go to the one on top here. So this being your order block, what you are going to be seeing is price moves down, right? Breaks these lows and takes out this liquidity, then comes back, retests this with a bullish candle. This is the retracement that we were talking about, right? This right here, this would be your retracement. As you can see, this will be your retracement. So when price hits that level, what do you see? You see that price prints a bearish engulfing candle, and this would be your entry, and your stop loss is going above this candlestick. So this candlestick that you see here is your bearish engulfing candle, or the a candlestick confirmation that you would want to see on your on your chart. Then we are going again on this order block that we have marked here. You see price was moving down, then price breaks these highs, as you can see. So when price breaks that, we can clearly see that, or we can agree that price has changed directions. Then price breaks this high again, as you can see. Let's just mark it so that you can see. Breaks this high. When price took out that high, what do you see, or what is left is this black order block that you can clearly see. And when price hits that level with this consolidation or retracement back to the order block, it prints a pin. So this pin would be your confirmation candlestick that you're looking for. And it's very, very advisable, if you would want a pin, or if you see a pin that is bullish when you want to go bullish, or a pin that is bearish when you want to go bearish. But a pin is a pin, so we're going to take this. And if you wanted more confirmation, you would have waited for this green candle, which is also a bearish, a bullish engulfing to this candlestick, and you did got your trade here. Your stop loss goes below, and let's just map it out. If you had taken this trade and your stop loss is going below here, and maybe you're going for that high, for this high to your left, you are going to go for a risk to reward ratio of 2.6, and that is very, very, very respectable, and I would take that any day. So this is what we are doing. And let's look at another example here. We see this fair value gap. So here we use the fair value gap. Remember, I said you can use any level, any zone, any criteria that you'd want. What we are interested in today is your confirmations. So price hits the level and prints a bearish engulfing candle that you can see, or we can also classify this as a railroad track, and your entry was going to be after this bearish candle, and you would see what you are going to go. So let's just do some projections right here, so you can clearly see that this is a very good order block that you can see right here. And after that, you can clearly see that price did take out this high by this move. So this is a very good order block, as you can clearly see. And why is it good? It printed a bullish engulfing candle just after the order block. And what you'd want to see is price moving into this area and printing one of these patterns that I showed you here, either this, that, or this, as you would want to see. And if it prints any one of that, you would take that as a buy. The stop loss goes below any of those candles that you would have printed, and you target this high, and you can easily go for 1 in 4, 1 in 3, depending on how you are going. So let's look at another example on GBP USD and see if we were to find these patterns, how would you have fared. So we have this order block that you can clearly see. We took out this high, right, and price came back to this zone and printed a bullish engulfing candle. I suppose this was news, but news is there to just accelerate the technical patterns. So this would be your bullish engulfing, and you'd have entered that trade. So you could have gone for 1 in 1, and you would have took your profit at this particular point. And you see, we have another beautiful zone that you can clearly see with your naked eyes at this point, right? Price traded back into the zone at this particular point and printed a railroad track. So if you look at these candlesticks, they are more or less the same in size. So this would be a railroad track, and you would have entered your trade at this close, and you'd have gone easily for 1 in 3, and you'd have hit your take profit at this particular point. Let's look at the last pair that you'd want to look at in terms of looking at these examples. So number one, you clearly see that we have this order block, right? And what do you see here? We have a break of structure with this candlestick, and number one, we have this move that took liquidity resting in these candles and retested this zone and printed a pin. As you can see here, this is a pin, and could have taken this trade, but I would have preferred this one is confirmed, right, in terms of this being a what, a railroad track, and this being a what, a bullish pin. Remember what I said? I said we would want to see a bearish pin if you want to go bearish, and a bullish pin if you want to go bullish. So this is what you are seeing here. Then we go here, we have an order block, then we have a bearish pin right here, a rejection on this zone, and we have what, a railroad track in this what, in this area where you see this bullish, and that. So you can clearly see that we have they call these ones three soldiers, right? I don't remember clearly, but you would know if you have read those technical books. So this will be what, three soldiers or something like that. I'm not sure, but this is the pattern that you'd want to see after a pin like this into the order block. Then you mark that zone again as your what, as your base. If you're someone who trades demand and supply, you'd classify this as your base, and price moving into that zone, bullish engulfing. You take your trade at this particular point. What do you see? Take a trade, your stop loss goes below there, and you are going for 1 in 2, and you could have hit your take profit at that high. And this is what you can do with this pattern. So just to recap, let's just go back to this one and recap what we have been saying. So remember, price would move up to a point of interest, to a level of interest, right? Then when price hits that, it's either going to leave one of these patterns, right? Number one, it can leave a pin or two pins for that matter. If you see two pins like this, this would be a very good confirmation. Or it can leave a railroad track, or it can leave a bullish and a bullish or bearish engulfing candlestick. So these are the patterns that you guys are going to be looking out for as you trade. And if you come to the charts, this is how it would look like on a chart, and this is how you would want to trade these patterns. And these are confirmation candles that you can use on order blocks, that you can use on fair value gaps, that you can use on any institutional level, institutional numbers, anything you can think of. And this you can use on any time frame, be it the H4, be it the D1, the H1, the M5, and things like that. So this is what I wanted to show you guys. I hope this would be helpful and you'd add it into your trading arsenal. I hope to see you in the next video. This is Shocks, and I'm out. Trade what you see.